Hello viewers, I am Sanjeev Pandya welcoming you to the Tax Time Show. This is the show, as you know, that gets you the latest information you need to know about your taxes. Whether it's a personal taxes or corporate taxes or any matter related to the taxes, you can find it all current and all very relevant and also useful in this show, courtesy of Sai CPA Services. Mr. Ajay Kumar, CPA, MBA with Sai CPA Services is once again with us. I'd like to welcome him, sir. Welcome to the show. How are you?
I'm doing okay, Sanjeev ji. Thank you.
Very good. Doing okay, huh?
Doing great.
In a busy schedule, you're doing okay, so that's good.
Yes. No complaints. Thank you.
No complaints. All right. Every week, you give out updates and information, latest information around stimulus packages. And I know, Ajay ji, everybody talks about PPE. That's one of the most talked about issues. On the other hand, EIDL, Economic Injury Disaster Loan, is least talked about topic.
Absolutely.
Please tell us, why is it least talked about topic and what are the pros and cons of EIDL?
It's my pleasure, Sanjeev ji. You are 100% right. A lot of people, everybody is talking about PPP, Paycheck Protection Program. Not as many people are talking about EIDL, Economic Injury Disaster Loan. And the truth is, for many small businesses, for a lot of small businesses, EIDL loan was more money than the PPP loan. In EIDL, most small businesses got $150,000. In PPP, people got 2.5 times of their monthly payroll. So for the companies where the monthly payroll is less than $60,000, which is a large company, I mean, you have 10, 15 people in order to get to $60,000. For those companies, especially for the companies under 20 employees, EIDL loan was much higher than the PPP loan. Still, not a lot of talk about it, only because PPP loan is forgivable. You don't have to pay the PPP loan if you follow the right directions. EIDL loan, on the other hand, is supposed to be paid back in 30 years. So not only you have to pay it back, but also you have 30 years as opposed to 2 years that we have in the PPP loan. So there is less urgency, less grab for money because it's not free money. So in a lot of cases, if your PPP loan is, let's say, $1,000, people will take it only because they don't have to return it. But if your EIDL loan is such a small amount, a lot of people wouldn't take this loan thinking, who will go through this whole paperwork, whole hassle, if you have to return this money and the money is not enough.
Well, Ajay ji, what you just mentioned is perhaps one of the most talked about and one of the most known difference between EIDL and PPP. But now my question to you is that when people are not talking about EIDL, and even though they have gotten some money through EIDL, when they go to file their taxes, this year's taxes, right, will EIDL loan come into effect on their tax returns?
That's a great question. And the answer is yes and no. But before we answer the question, before we say how exactly it's going to affect your taxes, take a step back. The PPP loan, because it's forgivable, it becomes your income. You have to add the PPP loan amount in your income. At least for the time being, the rule is the expenses that are covered through the PPP loan, those expenses needs to be excluded from your tax return. So in effect, the PPP money, the forgivable part of the money, becomes your income. The EIDL loan is not your income. Since you have to return it, it's seen as a liability. So it will affect your taxes only in the sense you have to show it on your business tax return, on your balance sheet, that you owe this money. You have this liability, but it does not affect your P&L, profit and loss statement. So it wouldn't really change your income tax liability, but you do have to show it on your tax return, Sanjeev ji.
Okay, I got that point. Now, the other question I have is that EIDL money, let's say when someone receives the EIDL money, what can they spend on that money?
Wonderful, great question. So when people got this EIDL money, and most people got between 1,000 to 150,000. The maximum you could get is 150,000. Minimum the government gave is $1,000. So anything based on the information that you submitted as part of the application, how much is your revenue, how much is your gross profit, government decided how much loan, what's the adverse impact for your business, how much loan you should be giving out. So when you file this application to get the EIDL loan, you attested that my business is adversely impacted under COVID-19. And please understand, please remember, SBA does not give loan over $25,000 without personal guarantee. The principle, the rule is all SBA loans over $25,000 must have the owner's personal guarantee. EIDL does not. In EIDL case, government, SBA, did not ask for your business tax return, did not ask for your personal tax return, did not ask for your personal financial statement. All SBA loans require these things if they are over $25,000. Why did they not ask for it? Only because government wanted to push money into the market. So they have certain attestations, they have certain conditions around it. The conditions that you signed as a part of getting the loan, if you go back and review your loan documents, it clearly says my business is adversely impacted. If you have a business which is counter to COVID-19 and your business actually grew during this time, you technically do not qualify for this loan. So the loan is meant for businesses where the business got adversely impacted. You said that I will use this money to save, protect the business. I will not misuse this money. I will not take this money home. I will not have my own salary increased, and I will not move my business to a different location without telling SBA. You also attested I will only use the US products, US labor as much as possible. There are a lot of rules, a lot of regulations around it, that what the money is meant for, what you can do with this money, what you cannot do with this money.
I got your point. I have one question before we go into the break, because the time is almost near for the break. SBA loans and EIDL, they all came into effect during this pandemic.
Absolutely.
It was all to help out businesses during this pandemic. That's why, like you said, government pushed it out there without checking any paperwork, anything, right?
No.
Then why have different set of rules for both of them?
That's a great question.
But before you answer that, we're going to take a break. When we come back, viewers, you'll find out the answer to that question. Please stay with us.